Well, thanks for tuning into this very special conversation with a very special guest. Manish Chokhani needs no introduction, joins us right now on Bloomberg Quint to talk about his thoughts on, well, simply put, what happens next. Manish, a question that you would have been asked a number of times already, maybe now and maybe after the exit polls as well. But I ask you again, what happens next after this decisive mandate? Is it a continuity of what has happened over the last 5 years in terms of reforms and decisions? Or do you believe that there is a mandate and the opportunity to do something bigger?
Sure. Well, first of all, thanks for having me, Neeraj. It's great to be back.
Thank you.
And to respond to your question, I do believe, yes, that the mandate that has now been delivered by the people of India to the Prime Minister is actually, to my mind, quite unprecedented. I only remember when Rajiv Gandhi had 400 seats, but even then he had 150 people odd in opposition. I don't think in the current dispensation, while NDA looks like 150 seats, but given that the YSR Congress and the Biju Janata Dal and others are also going to be supportive, it's unprecedented, the mandate which has been delivered in the Lok Sabha. And also given the way the composition of Rajya Sabha is going to be changing within the next 12 months, the control that the administration will also have of the upper house, I think sets the stage for very, very deep-rooted and substantive reform possible in the country. To take forward your question on whether you should expect continuity of reform on a linear basis, or can it actually go a bit non-linear and be a little more deep-rooted than what we've had, and actually go into what we would have called the second generation of reform. My hope and expectation now is, yes, it is possible. If you had asked me before the election results, if indeed the mandate had been like 230, 240 seats to BJP and then a coalition and so on, maybe the answer would have been no. But seeing the scale of this mandate and the stature of the Prime Minister which has now been lifted up, and the aspirations which seem to have been unleashed in the country, I do think that very deep-rooted reform is likely to happen. And also when I put it logically with what they are trying to do, with the own manifesto that the BJP released, saying they would like to do $1.5 trillion of infrastructure spend in the next 5 years, that's roughly $300 billion a year, which is, at current run rate somewhere between 10 to 12% of GDP. If that's the level of investment which has to be done only in infrastructure, and let's not forget we have to add it for education and healthcare and also social spending, the fact is that the government doesn't have the fiscal space to do it. So as we will approach the budget, we'll see that the spend we are doing in the union budget is about 3% of GDP is being spent only on interest. And given that the collection of the government is barely 9% of GDP, it's unsustainable. So number one to me is the whole comeback of the word of privatization, which was there in the first Atal Bihari Vajpayee regime, seems to me something which is inevitable and it has to happen. The previous administration of this government had in fact put 88 companies out for complete sale, but because they were very minor and people didn't really notice them, we felt that privatization is off the agenda. I do think it has to be back central to the agenda of this government. Number two, the question of what happens to people in rural distress, what happens to jobs. Again, it's a reality of life that you cannot wish away the fact that agriculture is a commodity and employment in agriculture is low paying and income levels are not easy to lift up. So while sure, you can do your best to increase value addition by doing food processing, or you can improve the distribution chain to ensure that the farmer gets a lot more, the reality of life is you cannot have 60-70% of India employed in the farming sector. And there's no alternative but to pull them away from the farm into the cities, into higher paying jobs. And the only way to do that is therefore to create a lot more urbanization and to create a lot more industrialization and a lot more service sector jobs, which will also then require a lot of investment in the cities. So it's counterintuitive, but if you want to solve the agrarian crisis, you have to urbanize a lot more and a lot faster. So I would expect to see a lot of that as well. And number three, if you're going to get this industrial engine going with the way the trade setup is globally, and people want to move away from single source from China, India should be a natural beneficiary of that. We're currently losing a lot of that trade away to Vietnam, Bangladesh and others in textile. It cannot come to India until we fix our land as well as our labor sector, which has been very inflexible in the past. So these 3-4 major areas, I think, will have to be addressed within the next couple of months, and then of course it plays out over the next 5 years. But I don't want to, just keep going on and on about this. Maybe we'll take this into our conversation as we go ahead.
Yeah, sure. Okay, let me try and divide this into, since we've already gotten on the topic, Manish, let me try and divide this into the incomes and the expenses. And let's start off with the income. You mentioned strategic privatization. I'm presuming you mean strategic privatization. And maybe the government will give out the lists quickly, maybe act on it quickly, because, a lot of people speak about how if it happened on time with Air India, it could have been a different thing altogether. So that is one. And I presume that's very important. The other important thing is, because you look at numbers so closely, would you reckon that the one big income stream could be streamlining GST in a way that the monthly collections become a lot higher than what it is right now? Because one would assume that they went through the whole of this exercise not to just get a patch on what was anyways coming in through the other tax methods.
1 lakh crores.
The ambition would be to be much higher.
That's right. Yes, Neeraj. So I think there's been too much focus on the GST rate. I don't think even the rate of 18 is the correct rate. I think this rate will probably have to trend down. Finance Minister Jaitley had already said even before we went into the election that his aim would be to bring down the 5 slabs to maybe 2 or 3. Eventually you have to move to 1 slab. Number 2, I think the focus should not be as much on the rates as on the velocity. And the issue is we've kind of put a spanner in the works of a number of things by trying to be too cute on what the revenue neutral rate is, as opposed to saying if we can increase the velocity of trade, then the actual collection ends up being higher even with a lower tax rate. They've accepted that reality in direct taxes by putting rates down for individuals and saying at lower tax rates people become a lot more compliant and therefore our tax collections go up. They haven't yet accepted that logic when it comes to GST, because presumably you had to get all the state finance ministers and the bureaucracies aligned. But it seems unnatural that, for example, we would pay 28% GST rate on something like cement, which is going to be the building block of the infrastructure and the housing boom that lies ahead of us in India. Similarly, while it sounds very cute politically to say how can I charge the Mercedes car and the Maruti car owner the same tax rate, the reality is if the Mercedes car is sold at 1 crore, even a 18% tax rate means a 18 lakh rupee collection, as opposed to saying if I keep the rate at where it is currently, I think is north of 50%, there is no sale of that car anyway. So you have zero collection on that. So would you rather have 18 lakhs and sell 10 cars, or would you rather have zero by selling no cars, even if you keep the rate higher? So I think short point, my answer is yes, GST needs to be fixed, needs to be made simpler, and hopefully that's the direction in which they will move.
Okay. 3 areas of immediate spend, Manish, that that one can kind of think of when it comes to what this government will need to do. The rural reflation, because that is an urgent and pressing need, while urbanization and industrialization will probably solve this issue over the long term. The near term would probably see rural reflation and maybe some spending there. 2, the NBFC issues and the liquidity issues that seem to have gripped, and maybe some amount of intervention out there would be very, very necessary. And 3, the infrastructure spend, which you alluded to, which is pretty high a number. How does a government which is already stretched on its balance sheet meet all of these 3 in the near term? Because everything else that you said, which is either the GST rates, which is not a function of, it's not in the government's hands, and strategic privatization is not something that will happen in the next 2 or 3 months necessarily.
So it's not a question of 2 or 3 months. The thing with financial markets, whether it's the rupee, whether it's the debt markets, or whether it's the equity markets, is what you believe is possible, and those rates then start aligning very, very rapidly. Now, illustratively, if you say the government does put up not a 80,000 crore disinvestment number, but we say over the next 5 years we want to actually sell $800 billion worth of strategic assets which we are sitting on, which could include public sector units, departments of government, a lot of land which they are sitting on, and so on. The capital is actually sloshing around in the world. And even when you look at it, I wouldn't have imagined somebody coming and saying we will buy into the Reliance refinery or the petrochemical business and pay maybe 10 or 15 billion dollars for it. The reality is there are people, in the world who are looking for economies like ours where there is growth and there is certainty of profit and a return of capital along with return on capital, because there are not that many opportunities of that scale available in the world. So if indeed we have to go down that path, privatization becomes the center point of what you will have to look at, accompanied of course with, like I said, the attendant labor reform and so on. The point you made about the distress in the farm sector actually is a bit, like I said, counterintuitive to think that whatever the government will do to push money into the farming sector is going to be counterproductive in a way. Because if you do agricultural product price support, which the earlier UPA did, you end up with inflation, which then gives you a higher interest rate and a weaker rupee, and it's back to inflation cycle again. So it kind of became self-defeating. If you do minimum income support, you again come back to the same vicious spiral of inflation, interest rate, and so on. The reality of life is this, and we'll have to accept it, that farm incomes are the lowest form of economic activity anywhere in the world, which is why most economies of the world barely have 10%, if that, of their population employed directly in farming, and everybody else moves into secondary sector, which is industry, or the tertiary sector, which is services. And now as we go more and more into a knowledge economy, their skill level has to be incrementally that much greater. India cannot be the only country going against its grain and saying in a commodity sector where prices are structurally trending down globally, we not only want to support them and give them higher prices, but we also want to let it remain fragmented, where in every industry or every sector in the world, when you have that level of commoditization, you get consolidation and it becomes 2 or 3 industries or 2 or 3 large giant players who can then afford to hold on to and drive efficiency and costs down. So there is no escaping this. You can do a short-term band-aid fix by putting some money into the rural sector for a couple of months. But I don't think if you're going to measure this government over the next 5 years, if that's the only approach that we can bring to the farming sector by putting money into the farming sector, trying to clean up the distribution chain, trying to encourage a little more food processing, without moving, I would say 80-90% of the people who are dependent on farming to get off the farms, I don't think we will achieve what we're trying to get to. Also related to this, like you said, is if you want to increase the per capita income of India, that per capita income only goes up when you're getting better paying jobs, and thereby you have to be that much more competitive with the world in those jobs, whether it's on industry or whether it's in the services sector. And remember, we are staring into the abyss when you come to where the world is going now with robotics and artificial intelligence.
Yeah.
So if you have to employ, 1 billion people and who are all coming of working age right now, with the skill level that we currently have sitting on our farms, or even those who get off the farms are coming and becoming, at best, say a delivery boy or, security guards or whatever they are doing in the cities, that you may notionally have employment, but that's not the right level of employment for these people.
Yeah, no.
So that massive program of skilling, urbanization, industrialization has to be thought through, and our aspiration now has to be to compete with China, not to compete with the previous administration of the UPA.
No, that's well said, and hopefully the demographic dividend doesn't turn out to be a demographic curse if indeed this is the way it progresses.
To be a nightmare.
Okay. A nightmare, maybe. That's well put. Manish, just, and I want to come to you, what do you think would be the 5-year thing for the next 5 years from an equity market watcher's perspective as well, both from a global and a local investor's perspective. But just one quick thing, as we approach the budget as well and the RBI policy slated to happen in the next 10 days, would you believe 2 of the things might happen? One, would there be further easing, which a lot of people argue against, would lead to the quality of the expenditure worsening off in favor of consumption largely? And 2, would you believe that there might be a need because of the way the global economy and the local growth is shaping up to maybe have a bit of slackening of the fiscal prudence that they have steadfastly stuck to right now, purely because it might be the need of the hour?
So let me take the interest rate question first. We've spoken often in the past, and I'm a bit of a broken record on this, that in a country where 80% of the population really doesn't touch the organized sector, whatever you do to interest rates is not really going to solve your supply side problem. So when we have agriculture price inflation and we put interest rates up, I don't think your demand slackens because interest rates are up. So I don't know what you achieve by doing that, except eventually your rates are up, your economy, on the industrial side slows down because no one on that side can afford to borrow at those rates, and the rupee then collapses, and then you import that inflation in through higher oil prices and other commodity prices from overseas. So, to my mind, if your industrial, indices are slowing down, your exports have done nothing for 5 years, the consumption side of the economy is slowing down, and the government balance sheet, as you said, looks stretched. What are we achieving by keeping interest rates up? Interest rates have to tend to much, much lower levels than what we have today. And in a world where $13 trillion of government securities are being sold at negative interest rates, where the world is just happy to get their money back, forget about interest, to just get their money back, they're willing to take a loss on interest. We can't be, the sixth largest economy in the world, hoping to become the third largest, and continue to pay these kind of usurious rates of interest to people. So while capital needs to get a lot more productive in India, the rates in India are just completely foxes me where we are heading with this. If you turn to the government balance sheet, this myth that we can let go of fiscal prudence, and because every year we're going to have some crisis in India, we should live with 3 or 3.5%. It's again wrong policy, because the reality is you're holding assets of $1 trillion on the one hand, which barely yield a return of 2% to you, and you're paying interest on the other side, which is aggregating to maybe a third of your total revenues in a real basis of what the government collects. It just completely foxes me how this country runs its finances. If you were to look at this as a company, you say this company earns 9% of GDP, it spends 12.5% of GDP, and its borrowing is therefore 3.5% of GDP, and its interest cost is 3.5% of GDP, you would have sacked the CEO and the CFO of this company. So fiscally, there is no alternative to my mind from this government getting out of business. There is, like we said, I don't know if my number is now wrong. When we started, it was $1 trillion of assets. If you add up, why are we running not only Steel Authority of India, but why can't we have capital available to railways? Why can't we have capital available to life insurance? Why can't we sell and monetize a lot of the government land? Why do they have to sit on these buildings, and why can't they just rent them and pay for the administrative charges? Why can't we reduce the administrative, what we call SG&A burden of this government by having fewer employees and better use of technology? That kind of deep-rooted reform is really the pressing need of the hour. And to me, the first steps towards that should be now shown in hopefully the next 100 days. There are already committees headed by Bimal Jalan on administrative reform. There are committees set up to identify through Deepam what assets can be sold off and so on. So the information is all there, the knowledge is all there. I think the political will is what was always questioned, and now that the political space is available through the mandate which has now been given, I can only pray to God that India finally delivers on its potential, and we can match up to then the aspirations that the young people of this country have.
Well, cross fingers for that, in which case the two-part question from an equity investor's perspective, Manish, let's work with an assumption that some of these, if not all of these, were to take place. What is in it from somebody who's looking at investing in India? Would there be a growth which is broad-based, because benefits of such moves percolate not only to a few things, but a larger portion of the economy, and therefore maybe more companies and more sectors could come back to growth. Yes. So would that happen, and therefore is that great for the economy and markets? And two, just one word, we speak about this every single time, and you admit as well that every single time we see some of these highly valued companies, they only go on and add another 10-15% every single year. HDFC, a bank, a case in point. Now Bajaj Finance has taken that step as well. Do you think market continues to remain polarized on valuations and returns, or do you think it will become more broad-based?
So I'm hopeful it becomes more broad-based, and again, to put things in context, while the Indian market looks like a $2 trillion whatever valuation market, it's very narrow, because the top 6 companies are 25% of this, which is $500 billion valuation. The next 18 companies or thereabouts are the next 500 billion. So at 23 companies, you've covered 50% of India's market cap. And then I think there are about 45 odd companies in the next quartile. So roughly 70, 75 companies, and you've covered 75% of India. And for a country of this size, which is aspiring to become the third largest economy in the world behind US and China over the next decade, it cannot be so narrow, and it has to get more broad-based. But because this broad basing of the economy has not occurred due to, like I said, all the issues we've had with not going through with the reform which was unleashed 20 years ago, in some sense we've remained a shriveled economy compared to, say, a China where we were kind of equal 30 years ago, and now China has become 6 times our size. So if the right things happen and we can broad base between exports, industry, consumption, naturally the boom will be more widespread. If things happen incrementally and piecemeal, sector by sector, then it will probably be a more rotational kind of move over there. And if nothing of this sort happens, then people fall back on what is the good old Indian theory of the income J curve of India, where 2% of India is car owners, 18% of India is two-wheeler owners in terms of motorized motorcycles or scooters, and 80% of India are either walking bare feet or they are on bicycles. And the hope has always been that the 2% people will become addressable by the 18, and therefore it can be a 9-fold expansion over there, that the two-wheeler owners become car owners, and similarly the 80% people on bare feet or bicycles will become two-wheeler owners. And that's why you keep seeing these high multiples for consumption-oriented stocks in India. And I've used that example to just make the point, because when it comes to toothpaste or detergents or fast-moving consumer goods, penetration levels are pretty much there, and it's only a case of uptrading over there from, I don't know, a basic Lifebuoy soap to maybe a Dove at the top end. So it's through price improvement rather than through volume consumption. Whereas in consumer durables, there is enormous scope to add number of consumers as well as get them to trade up. I don't know if that helps you, but that's really the paradigm through which most investors would approach this market.
Yeah, well, maybe people will read in between these lines and try and form their own theories, because I don't know if there is one right answer to this question as well, any which ways. Manish, you traverse a lot around and you look at what is happening around the world, and some of which might get replicated in India as well. Tell us about something that you've seen in the recent past which could become a reality out here and could also present an investment opportunity, because frankly, one small sore spot that a lot of people now have is that a large portion of the consumer economy is not getting represented on the index, and therefore it's not possible for people to buy any of the online sales. Most car companies not quite there. What is it that's happening around the world which can get replicated, and the listed Indian space could actually offer opportunity to the investors?
Yes, that's actually a question which is foxing a lot of us investing in public markets. Fortunately, I do a lot in private markets as well as trying to build out some businesses on my own as well. But if you see the whole spectrum, I think what's happening, and like I said, the 75 companies, if you were to look at in India, which control most of the market cap, a lot of this would qualify as what I call old economy. And in the rest of the world, no one's really bothering to buy the equivalent of a GE or a Siemens or a Bechtel or whatever in the world. So while we will have this boom, and hopefully that lies ahead of us as we spend on infrastructure and industrialization, these are not sectors where you get high multiples, because it won't excite most global investors, who will remain a lot more excited about consumer, tech and financials. But the multiples are already very, very elevated for most of the companies over there. Now, issue is, if I look at, for example, the Indian tech sector, in aggregate, the Indian IT services sector probably makes $10 billion of profit. And therefore, if I compare it with the other tech sector in the world where, maybe an Apple will make north of $60 billion and a Google will make 50 billion and so on. Even if you looked at China, the big run in their market caps came when the Tencents and the Baidus and the Alibabas created literally hundreds of billions of dollars of market capitalization for them, and lifted the economy, and also then lifted the kind of jobs which were occurring in that economy. The only play that you have in India of that magnitude today is possibly going to happen through Reliance and Jio. Now, how you would value it and what the strategic deal that they finally end up doing, as is spoken about in the press, is probably the only large kind of play available to the Indian market in that space. The other areas that you unfortunately will have to look at, because effectively Walmart has bought Flipkart, Alibaba and SoftBank between them have bought Paytm, and they'll probably try and recreate an Alibaba over here. We are copying the model of Uber by building Ola over here. We are copying the model of Airbnb by building Oyo Rooms and so on. There's nothing original in that sense coming out of India, which then remains addressable to the Indian investor and which then addresses the rest of the world. So willy-nilly people are then falling back on these consumer brands, the FMCG companies which are trading at, to my mind, absurd multiples, in a world which is becoming, for lack of a better term, Amazonized. And as these online retailers figure out more and more about their consumers, and they start putting their own product out, and they get rid of that 35% distributor and trade margin, their products become cheaper and they become a lot more tailored towards consumer needs, and it starts affecting these global brands as well. And there are examples of that. For example, the Dollar Shave Club knocked out a lot of the valuation of Gillette globally, which even then Warren Buffett, who's a holder of P&G, had to come out and admit that that's what happened over there, and so on. So seeing where the world is going towards, with the way technology is moving, with the way innovation is coming in, I fear a lot of India looks like very old economy. And for a country which believes its destiny is to go from number 6 to number 3, if you look what's ahead of us, maybe France, Germany, UK, maybe we cross them. But when you're approaching the battle eventually with China and the US, we have to get a lot more innovative in this next 10 years. And sadly, you don't see enough of that happening as yet. And it's not because of lack of capital, because it is now available to India and to a lot of Indian entrepreneurs through venture capital funds and so on. But and it's also not because of lack of talent here, because a lot of the talent which is working, a lot of these global companies actually is Indian. It, I think, is maybe a lack of will or lack of ecosystem or what, I don't understand. But this is really the space where I would expect the next big, $50-100 billion companies to come out of. From a more immediate perspective, there are certain large trend lines that you can play in the financial space, for example, which is everybody's favorite. The financialization of India is only just now starting, and thanks to GST, DeMon and all, people have moved away from gold and real estate and so on to putting more of their money in financial savings. And over there, the trend lines are, for example, long term going to be in favor of private sector banks as opposed to public sector banks. It's going to be a lot in favor of the mutual fund business, as opposed to how it is in the world, where the mutual fund deposits are actually larger than bank deposits, and in India it's a fraction of what bank deposits are. So there is a big headroom available for the mutual fund industry in India to grow. And similarly, for a lot of other sectors within the financial space, there is enough room to do there. But financial sector is already 40% of our market cap, and it cannot be just this one single engine driving us forward. So we will have to find new export engines. The old Indian IT services, the old Indian kind of generic chemical, pharmaceutical-based business, model is not that interesting. You're not going to make 50, 60 multiples in those businesses. They have to take that cash flow and redeploy it into more and more innovation. And newer sectors, whether it is automotive, engineering, textiles, tourism, all of these will have to emerge to attract inflows, both from a forex perspective as well as from a utilization of labor perspective, and then also the large profit opportunity which is available here. So there are a lot of themes which can play out, and you have to naturally keep watching all of them. And it's eventually you get the right opportunity at the right price is really when it comes together.
Manish, just as we wrap up, it seems to me from your answer that for somebody who is not equipped to go out in the private space and not astute enough to look at global trends and try and figure out what will happen here, a lot of other options are hope trades. The only one which is not a hope trade is financials, which are already a large portion of the markets and therefore don't know how much they will move ahead.
Yes. Right. So it's, well, the sector valuation maybe in aggregate will look like 40%, but within the sector they are interesting companies. So, like you said, people and myself included, we benefited a lot with HDFC Bank or Bajaj Finance and so on. But even these companies offer you stunning valuations at different points in time. And I just draw you back 6 months ago, Bajaj Finance was as low as 1900 in the middle of the NBFC crisis. Similarly, HDFC Bank before its ADR and QIP had actually come to a very, very reasonable price. And even currently, it's not like HDFC Bank is an expensive bank when you especially compare to the other banks in India. And given the quality of earnings which comes out over there, the whole mutual fund space is interesting. There is companies which are equivalent of, say, a Bajaj Finserv, which are there in the market, which could be very interesting to look at. So while the headline looks expensive, if people do their homework, there are enough things to do over here. And similarly in other sectors as well, your own space of media looks, it could be very interesting. Automotive seems to be flat on its back, but India cannot be a 3 million car market or a shriveled two-wheeler market, given that, like I said, there are so many people yet to come into two-wheelers, and the two-wheeler people yet have to come into cars, and the Chinese market by volume is more than 10x, and by price is more than 4x or 5x of India. So it's a 50-time larger market than the Indian market, just in that space. And it's not like they're smarter than us or they're much more organized than us and so on. It's a matter of putting the policy framework together and creating the conditions for that kind of growth. And sometime in the next 10 years, if this happens, and the end point is maybe a 40x larger company than what it is today, you would probably pay a higher price for something like that, especially in a bad time like this. So there is enough to do, is the short point I'm trying to make.
I was not trying to get you to name sectors, to be honest, Manish, but anyways, you've done that, and thank you so much for that too. At some point of time, Manish,
Sure.
in the next 12 months, we'll look forward to talking to you about what India can learn from the world as well. But it was fabulous chatting with you today. Thank you so much for taking the time out.
Sure. Thanks for having me, Neeraj. Thank you.
All right. And viewers, thanks for tuning into this very special broadcast. As the vote count commences and the markets gyrate to every single vote, won or lost, Bloomberg Quint Live gets you the best lineup of market experts to try and decode the impact of the elections on business, economy, and the markets. On the 23rd and